But we begin with the markets, as we often do here on NYSE Live. And joining me now is Aquiles Larrea, founder and CEO of Larrea Wealth Management. Aquiles, thank you for joining us on NYSE Live.
Ashley, thanks so much for having me back. I appreciate it.
So good to see you. So what are you going to be following most closely in today's session?
Yeah, today we're looking at consumer confidence, but we're also looking overall at the market. What are the earnings telling us? I mean, Home Depot is an important component. Home starts. We're also very interested in this point. Where is AI going at this particular point? And the expenditures. I mean, I look at Microsoft spending $50 billion in the AI space, and we want to say to ourselves, is this just part of the trend going forward from the future? Is inflation going to cut into that? Because we're seeing inflation at roughly 3.2 to 3.4% in the range. Also, high earners right now versus low earners we're starting to see a growing divide in terms of sentiment. In terms on the low income side, we're seeing sentiment being more stagflation, more persistent inflation worries. We look at inflation. Inflation's about 3.4% right now, but that doesn't really include what you're seeing at the grocery store. The affordability component keeps coming back into play, and you have to be cognizant of that, because going forward, if I'm a consumer and I'm going to make expenditures, whether it be business, life, or what have you, you want to make sure that you're doing so responsibly, strategically. But you can't do that if you're seeing double-digit increases in pricing. Now, we've seen some oil coming down in terms of gasoline pricing going down in some areas. We're seeing some of the areas of food stuff going down as well, but not a significant move to the downside at this particular point. So I'm expecting these consumer confidence numbers to come down a bit, but overall, the market is poised. If we start seeing really good earnings across the technology front, we could see that start to move on the upside. We could also start to see a sector rotation, because, the Magnificent Seven has been paying a lot of dividend, return back to investors. But if we start to see a broader rally in the market, that could be a very interesting component where we're all making money in different areas and not just in the Magnificent Seven area. We also think vitally is really at the end of the day, stocks are well poised. There's a lot of stocks that are highly undervalued. So we at Larrea Wealth think that stocks are going to continue to move to the upside, although it be more a muted move to the upside. So we're not going to see that big double-digit increase in certain areas that we saw last year. We're going to see a more muted 7 to 10% in those aggressive type companies. In the AI space, we really believe that this is the future in this country. And these companies that are lining themselves out, like your Microsoft, Oracles of the world, that are lining themselves up, they're thinking the long game. They're not thinking short term. And we believe that that is the right move at this time, so they will benefit long term.
All right, and the major averages are also looking to bounce back after they fell by 1% on Monday. What is currently driving sentiment?
Yeah, well, we're seeing right now, like I mentioned before, the pricing has a big component. If you're a high wage earner and you're not as sensitive to pricing as someone who's lower income, that's seeing job stagnation, that's seeing wage stagnation, that we're also seeing pricing really not moving at the grocery store. So we have to be cognizant of that. And that divide is starting to really become bigger. It wasn't, we're at historic lows in terms of sentiment versus what we saw, in just the past 4 months. So what could happen going forward is, are we going to see at 10 o'clock, are we going to see these numbers move up slightly from the January dip that we saw before? Or are they going to remain relatively flat? And we think we're going to see a little bit of an uptick in terms of confidence numbers, but we believe that it's more important that we keep monitoring what it is going forward in terms of pricing, in terms of affordability. This isn't just a buzzword. If you can't afford certain initiatives, you're not going to move in that direction. So it's very important that we, as a consumer, in terms of what we're going to be spending on, be very careful and strategic about that.
All right, and we're near the end of earnings season with NVIDIA set to report on Wednesday after the bell. What is your expectation in our last minute together?
Yeah, NVIDIA is a very interesting stock. Even with the news that Meta is going with the AMD chips and the like, I think they're really well positioned abroad and as a whole. They're a dominator in the industry right now, and I don't see any competitors getting too close at this particular point. But let's see what happens with the earnings, because we think that there is plenty of opportunity for the stock to run up. We're high on the stock, hasn't really changed in the last 2 years, and we've made our clients a lot of money in that respect. So we believe that it's going to be a continuing trend, albeit a little bit muted. So maybe we won't see 30% this year. Maybe we won't see 100% in certain related stocks, but NVIDIA is definitely going to be a winner.
All right, thank you, Aquiles Larrea, founder and CEO of Larrea Wealth Management.
Thank you.